Bitcoin is heading scarily close to my previous second target for this, what I hope is a short-term bearish momentum. In today's video, I'm going to talk about why I don't want to see Bitcoin reach the previous 55K target that I've been talking about within the next week. And if we do, what it might mean following that. Now, if you're new to this channel, first of all, welcome. Second of all, let me give you a brief rundown of what this channel is all about. Besides doing general crypto industry advice that I think will be helpful, I do a few market updates a week for the purposes of short-term trading and sometimes long-term investing. So if that's the kind of information you're interested in, be sure to hit that like button and subscribe down below. Now, I focus a lot on open leverage positions and liquidation levels, as high levels of liquidity often act as good areas for reversals and targets on good open trades of retail traders. In the TBD course, which you can access on my website, the link is down below, I talk about how there are 4 players in the financial markets. Number 1 is the decision maker, those that run the world's economy, basically. Number 2 is the market maker. The market maker gets their orders from the decision maker, and their job is to execute that in the financial markets. And they are the ones that basically are hunting our stop losses and liquidation levels. Number 3 is us. We are called retail traders. And the 4th one is the one that I want to focus on in this video. That is the Bitcoin miners. Now, a Bitcoin miner's role is to solve complex mathematical problems, hashes, to add new blocks of transactions to the blockchain. This process secures the network, verifies transactions, and ensures the system remains decentralized, with miners earning Bitcoin rewards for their efforts. Now, Bitcoin mining is a business, and just like any other business, it has metrics that help to measure the health of the business. Now, the hash rate measures the overall health of Bitcoin mining as a business by showing the total computational power dedicated to mining. A high hash rate suggests a robust and competitive mining environment, implying that miners find it profitable and are investing heavily in the necessary hardware and infrastructure. When the hash rate is dropping, it indicates that less computational power is being dedicated to Bitcoin mining. Now, this can suggest that miners are finding it less profitable, potentially due to lower Bitcoin prices or higher operational costs or increased difficulty in mining. So, why am I telling you all of this? It comes back to what I told you at the start about my concerns if we hit the 55K level too early. So let's head on over to the office and go through some charts. So what I'm showing you here is the Bitcoin hash ribbons, and the blue line here is the current Bitcoin price action, and these yellow lines and dots here is the hash rate. When we're in a healthy market, the hash ribbons should be rising. When we have some problems, they start to head the other way. We can see back here when Bitcoin first hit around $60,000 in the last cycle. If you match that up to these ribbon areas down here, you can see that there was a pretty big drop, and that led to us holding around the 30K level for a couple of months actually before the bull market resumed. Now, we are at a high risk of that happening again right now. As you can see, the yellow lines here are starting to invert and cross over each other, which is very similar to how it started up here at the first peak of the last cycle. Now, it's important to note that the hash ribbons don't necessarily identify direction. That's not what it's about. As I mentioned earlier, it's about the metric that we use to understand the profitability of the Bitcoin miners currently. Now, this chart comes from Willy Woo. We can see here on Twitter, he posted, every day I look at 7 squiggly lines, that's being the yellow lines, to see if it's time. Nope. Not yet. Miners are still bleeding out, withering in pain. Let's have a silent moment for them. So let's tie this together with the current Bitcoin price and the current open leverage position liquidation levels that we have available to us right now. Looking at the Bitcoin daily chart, we can see here that we did have this attempted move up. That was how we opened the week this week, which is what I was expecting. However, I was kind of hoping that that move up would last a bit longer throughout the week. Unfortunately, it turned out to be just the false move week beginning, and we could not get above $64,000, which essentially was a rejection of the daily timeframe 20 EMA, which is very, very bearish. I was hoping at least to get to the 50, but we rejected at the 20, and we're now heading down again, looking like it wants to break the 200 EMA. Now, these liquidation zones here have changed slightly from what I've been showing on this channel for the past few months. So let's have a look at what is available to us now. Now, we expect liquidation zones to change as price starts to create a strong trend, number one, and also as it wipes out liquidation levels. As we know, there was a big one around this level that got taken out with this red candle right here. So everything basically resets, and we need to look again at the leverage once a big area gets wiped out. So that's all normal that things would change around this point in time. So let's revisit that now. And I've got up here the 1 month as well as the 3 month. We'll focus on the 3 month first. And what I'm looking for here is big yellow to green kind of pools of leverage, both below and above price. And then based on the price action in the charts, one of those will become more relevant to me at this point in time. So closest to the current price, the largest level of liquidity is below price. You can see here that we do have a big pool of yellow up here, yellow to green, but we got to get back and break the all-time high in order for us to get that. Now, something very, very bullish is going to have to happen. I'm not saying we're never going to come for it, but it does make sense that the easiest leverage to take out is currently below price than above price. The biggest yellow zone is this line right here, and that line sits at about 55,600. We also want to take into account the green around it, so we want to build a range there. And then in addition to that, you can see that there is potentially another range that may build. Now that range is between about 50,200 to about 52,400, but we don't really worry too much about this lower level right here until we see what happens at this level right here. If price heads down into this high level zone and we don't get a strong bounce out of it, that's when we start talking about the lower levels. But this is going to be our key area. If price continues to head down from where it is right now, this is going to be our key area to look for bounces. And in addition to that, we're probably also going to want to see these hash ribbons start to turn up again as well. The combination of the two things will give us more confidence that the macro bottom is in for this cycle. And so therefore, that's why I'm saying if this doesn't happen at around the 55K, then we have to start getting prepared for even lower prices. When we look at the 1 month liquidity, again, the pools are kind of the same. The two areas that are around the 50 to 54K, and then also about 55.5 to where price is now essentially. So the reason why around 55K is kind of my target. Now that's not an exact. When I say 55, it's literally within anywhere around $1,000 either side of that is kind of my range of a target for this move to a downside. But the concern that I have is that Bitcoin doesn't seem to want to bounce at all yet. And in an ideal world, we would not have reached that level without another retracement. Okay, so a drop here, a retracement, another drop, retracement, another drop. That retracement means short-term bullishness, like what we saw on Monday, but maybe over a few days where it makes an attempt to move up, creates a lower high on a higher time frame, then we expect downside. We don't seem to have that. We just seem to have pretty much a straight bleed, which concerns me because if we just continue to straight bleed into that zone, then because it's happening so fast, that zone might not end up marking the bottom. What may happen is a lot of people's target right now is 55K, okay? It wasn't up here. That was our target up here, but it's now everybody else's target as well. And so there may be a lot of dip buyers around the 55K level. A lot of limit orders might be in there waiting. Actually, there is one way we can check that is with the Trading Light spot orders. Let's have a look at that. Now, usually I use Trading Light to have a look at where the large orders are for futures trades, but I'm actually going to use it in this case for spot orders. And I want to find the highest level of spot orders that are currently waiting. I can see this red zone here, and if I zoom in on that, we can see the highest level currently is at 55K. So we may head down there from here, and if we do, expect some sort of a bounce, but if we're following the levels into that 55K, a bounce may only end up creating another lower high that could then potentially head down into the lower level of leverage that we have now. Now, remember I said to you that this lower zone is not that big yet in comparison to the 55K level. Well, what do you think is going to happen if everybody starts buying at 55K? Now, spot doesn't matter because spot doesn't get liquidated, but at the same time, people will open leverage positions. So if people open leverage positions around 55K, that's going to build new liquidity below price, which means that previously this area that is currently light green will start to turn yellow, and therefore there is going to be new higher levels of liquidity below our 55k target. And if the final damage isn't done and these hash ribbons don't start to turn around at that 55k level, then we could actually see potentially 50k Bitcoin. Now, when you're a short-term trader, like most of us are that watch this channel, none of this really matters because you can make money whether the price goes up or it goes down. The best way that you can use this information is to understand the macro trend and what is happening on the higher time frame, because if you're trading with the macro trend, your trades are likely to be bigger trades and have a higher risk to reward, and you're going to make more money out of them. Sure, you can also counter trend trade the bounces in between, but they're probably not going to have as high a risk to reward. So don't let this turn you off that. For short-term trading, it actually doesn't matter because we use leverage. We don't have to use high leverage. Some of the traders in TTC Discord only use 2-3x leverage, but the leverage allows you to short the market. So you can short, you can long, you can make money in between regardless of what the overall Bitcoin price is doing. And if you are looking for somewhere to trade, be sure to check out the links in the description of this video because all of the exchanges that are listed down there give you a very decent trading fee rebate on all of your trades for life. And in addition to that, on Bitget currently we have a promotion going on. So if you use the link in the description of this video to join Bitget and then deposit 100 USDT, you will get a 200 USDT futures bonus, which is pretty massive. Not to mention, anyone who uses exchange links that are listed in any of our videos and becomes a TTC member also get access to our Pro Traders team trade alerts. So definitely a lot of incentives to use one of those links down below. Now, does this mean that I think the bull market is over? No. But it does mean that there is a potential for us to not resume the bull market for another month or potentially 2 months. Because if this drop takes us down into the 55k region, it's only going to be a level 2 drop on the daily time frame, as I showed you, which opens up the potential for a level 3 drop. The level 3 drop is not a guarantee at this point in time. So don't start coming for me on Twitter saying, you said 50K, like you guys are all coming for me saying, you said 55K. Well, we're not far from there. Like, give it a second. I also didn't say that we would get there in a week. And I actually don't hope we get there in a week because I think that's a problem. But I don't think 55K is off the cards right now. So let's have that chat, 55K. But in saying that, whether we go to 55K and then bounce out of there and that's the worst damage, or we bounce out of there, create yet another lower high, and then come down into around the 50s, both of those areas, in my opinion, are still an amazing opportunity to plan for the rest of the cycle. I personally don't think that the bull market is over. I don't think that. I think we are having a needed correction because we definitely needed to wipe out the over-leveraged positions that we've had in the market for a very long time. We have started to do that, but there is the opportunity for more of that to be wiped out. So if Bitcoin does hit somewhere around 55K and we get a strong bounce out of that, I think that would be a great area to buy for the long term. However, if that happens and new leverage opens up below price and the hash ribbons are still an issue, we will need at that point to start preparing for lower prices. And what that means for altcoins is that it is absolutely not a time to buy altcoins until we see that strong bounce from Bitcoin first.